All right, let's get right into it. Today, we're looking at what real-time retail data can tell us about the cannabis market. You know, price is maybe the clearest signal of a market's health, and what we're about to unpack is this fascinating story that's been hiding in plain sight.
So, if you've been keeping an eye on the industry, you've heard this story a million times, right? There's a ton of competition, supply is through the roof, and the market is just getting squeezed from all sides.
But then, you go to buy something. You walk into a dispensary, you're browsing online, and the prices seem fine. The list prices, the sticker prices you see, they look remarkably stable. They don't seem to be crashing at all. So, what gives?
This is the perfect way to think about it, like an iceberg. On the surface, everything looks calm, cool, and collected, just stable list prices. But underneath the water, where you can't see, that's where all the chaos is happening. The real story is that intense market pressure churning away.
Okay, so let's crack this cannabis price puzzle. To do that, we have to completely ignore the sticker price for a minute.
Because here's the secret. The answer isn't in the list price at all. It's hiding in the discounts. The real story, the one that tells you about all that pressure, is all about how aggressive and strategic retailers are getting with their sales.
And make no mistake, this is not happening by accident. It is a very smart, very deliberate play by retailers. So let's get into their playbook and see why they're pulling this discount lever so hard.
I mean, it seems like a lot more work, right? Creating all these special deals, promotions, weekend sales. Why not just lower the price for good and call it a day? Well, it turns out there are a few really smart reasons not to.
It basically boils down to a three-part playbook. First up, flexibility. With a discount, you can react fast. Got too much inventory? Run a sale. A new competitor opens up down the street? Run a sale. But you're not locked in forever. Second, it's all about managing customer expectations. Once you drop a price permanently, try raising it again. Good luck with that. Customers will revolt. But a limited-time offer, totally different psychology. And third, and this is the big one, it protects the profit margins in the long run.
Okay, so that's the theory, but we've got the data to back it all up. And believe me, the numbers tell a crystal clear story of this strategy in action. Let's dig in.
Now check this out. At first glance, you might look at this and think, what's the big deal? In any given week, only a tiny fraction of products, we're talking just 2 to 4%, are actually on sale. It's not like the whole store is on clearance. It tells you retailers are being super targeted, almost like a surgeon with a scalpel.
But wait, that small percentage is not the whole picture, not even close, because the real story isn't about how many products are on sale, it's about how deep the discounts go when they are on sale. And this is where things get really interesting. Just look at this. It is night and day. On one side, you have the change in the average list price over time. It barely moves. It's basically flat, zero change. But on the other side, when a product does get discounted, we're talking massive cuts, 30, 40, even 55% off. This is the secret lever that's quietly lowering the real price that you and I actually pay at checkout.
And Theo Valmus, the founder of CannabisDealsUS, who actually gathered all this data, he sums it up perfectly. He says the market appears stable on the surface, but the effective prices, what people are really paying, are slowly but surely dropping.
So, what does all of this mean for the big picture? Is this a sign of doom and gloom for the industry? Is the market about to collapse? Well, no, not necessarily. It's actually a sign of something else entirely.
There's actually a name for this whole phenomenon. It's called price compression. And it's totally normal. You see this in pretty much any new market as it starts to mature. It happens when supply starts growing faster than demand, and so prices get squeezed. So this isn't a five-alarm fire. It's just the market, well, growing up.
And this pressure isn't hitting everything the same way. When you break it down, it's pretty fascinating. Hardware, things like vapes and batteries, their prices are much more stable. But consumables, we're talking flour, edibles, oils, that is a whole different story. That's where you see the constant deep discounts. It's the Wild West over there. And that's where the real competitive battle is being fought right now.
Which brings us to one last really crucial point. The fact that we can even see all this data, especially online, is a total game changer for everyone involved.
Think about it. Why is looking at online prices so important? Well, for one, it's where competition is absolutely ferocious. You can price check 5 different dispensaries in 30 seconds from your couch. That forces everyone to be on their toes.
And because of that, what happens online is often like a canary in a coal mine. It gives you an early warning for where the entire market is headed next. So at the end of the day, as more and more of this data comes out into the open, the winners are going to be the ones who can see past the shelf price. Whether you're a business, an investor, or just a smart shopper, understanding the real price, the effective price after discounts, is going to be everything.
And that leaves us with a pretty big question to chew on, right? As all this data keeps pulling back the curtain on real pricing, who ultimately holds the power? Is it the businesses, who now have to compete out in the open, or is it us, the buyers, who are now armed with more information than we've ever had before?